It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now in this one we're going to be going over a break of structures. Now first things first, we need to be clearing up what is break of structures. Now a break of structure is essentially, as we know, you probably already guessed anyway when we spoke about market structure, right? A break of structure is simply where price is breaking structure. So for markets to move up or down, well, up and down, a break in market structure must occur, right? So a break in market structure occurs when the market begins to shift direction and break the previous higher high, higher low, lower high, lower low of the market, right? And there's three different types, in which is what we'll jump into. Well, we'll do it in this video because it's only a quick sort of videos. But we'll pretty much, a break in structure is simply where price is breaking above previous or below previous structure. So as you can see here, right, if we just map out, this low here, right, what did price do? It broke in structure, right? We map out this one, price hasn't broken structure yet. Okay, we map out this one, price hasn't broken structure yet, right? Map out this one, price hasn't broke structure. Okay, so understand that that a break of structure, there's three different types of break of structure, which we'll jump into in a minute. But a break in structure just essentially means where price is breaking a price. Okay, so if we just jump onto here where it says break of structure types, we can see here that there's three different types of breaking structures, right? Now it's completely your choice and it's a trial and error. Okay, so break of structure number one is body breaking the body. Now body breaking the body, sorry, all it is, as you can see, is on the candle, as we know, has a wick and the candle, right? So in order for price to break a structure, to be a valid break of structure, price will break above and close above the previous candle body. So if we just take an example and just see what happens. So if we just mark out this here, right, what happened, right? Price broke in structure, but it broke in structure because, again, we're looking at the closure. Okay, so this is a break of structure type 1. Why is it? Because we haven't mapped it out using the wicks. If I wanted to map it out using the wicks, I'd draw it down there, right? There's not much difference in this case between the wicks and the candle, the body, but pretty much what we're focusing on, type number 1 is the candle, right? The body closures, and we're waiting for the closure above or below the previous candle closure. Okay, now if we look at break of structure type 2, so wick breaking the wick, it's essentially the same, but it's it's still the same in terms of like breaking structure. But if we just try and find a bit more of a clearer example, I could say, so right, if we look at this here, right, we can see here that if we go break structure 1, so we're going to map it out using the high of the candle wick, right? So map it out using the high of the candle wick on a swing point, right, and then draw it across, and the wick breaks the wick. So in this case, this would be a valid break of structure because it's type number 2 is wick breaking the wick. So the wick has broken above the previous wick, so that would be a break of structure to certain people. Okay, break of structure number 3 is body breaking the wick. So all that we're looking at, if we only traded number 3, right, this number 2 here wouldn't be a valid break of structure because we haven't closed above. As you can see, price closed above the wick, and that was, and it continued in the desired direction. But now there's so many different pros and cons to each different types of break of structures. For me personally, I like using break of structure number 1 and break of structure number 3. I have been leaning more towards number 3 lately. But again, it's completely trial and error. If you prefer, wick breaking the wick, if you think that's more consistent for you, then that's fine. But through back testing them all personally and using them personally when forward testing, I found that this one's the most consistent. And when I say most consistent, I mean, like, for example, price could break above and then continue in the desired direction and break below the lows. Okay, so that could be a false move if we're looking for buys off this order block, right? But if we, break of structure with this one rather than a wick, right, is much more consistent, because you'll often find that with number 2, you know, as we did in this case, it broken above, but it just sold off, right? And then even though it broken above here, it's, you know, slightly closed above, it's still sort of you know, pull back at slightly less than this move, okay? And if we go back to candles and candles, right? So like this one, for example, you can see here that would have been mapping out using the candles, closed above, slight drawdown, right? Slight pullback. So for me, in order to qualify, you know, for anything to qualify as a break of structure, I need at least this wick to be taken out. Alright, so as you can see right now, your Japanese yen is trending to the downside, right? Because obviously we've got a high, low, high, low, high, low, high, right? So that's telling us that price is to the downside. We took out previous structural lows, okay? And also, if price was going to continue bullish, I'd need a break of structure at least above this one. And for it to confirm that move, I would need a break of structure above the, you know, the newly formed higher, sorry. So yeah, that's pretty much structure breaks. It's very simple, and those are the different types. So it's up to you what you use, but personally, number 3 is probably the most consistent, because, you know, it's the high of the highest in which price went. So if price breaks above that high, the highest point in price, you know, then that's a high probability that price will continue that desired direction if it closes above it. It could come just wick above it, but when this is the difference, right? We need to understand the difference between a liquidity sweep and a break of structure. If you're break of structure number 2, and you prefer number 2 to do your break of structures, then you got to remember that it could just be a liquidity sweep. So price could, you know, form a wick above, which is just tapping into an imbalance previously before continuing the desired direction. But to a lot of people, they would think this is a break of structure. Okay, so I'd personally avoid number 2, but it's up to you. Obviously, I can't tell you what to do. But number 3 is my primarily focus. But yeah, that's pretty much it, really, guys, in terms of structure and structure breaks. There really isn't much to it. And in the next video, we'll be just going over, you know, pretty much mapping out your, like, you know, I'll be using number 3, but it's just like marking up your ranges. So right, when you understand your ranges, okay. So we'll jump into that in the next video.